Dear students, today I am going to explain a sum under the topic of prime entry books. Take my tute prime entry books and take the exercise number 35. Right. Following assets and liabilities were extracted from Usama's business VAT registered as at 1/1/2017. Liabilities and then assets. So liabilities and assets are given on 1/1/2017. That means these are opening balances, and you are required to prepare prime entry books, general ledgers and trial balance. So January month transactions are given. January 2nd, 3rd, 8th, 10th, like that. These are the dates. On that dates, the transactions have occurred. So at the end of the month, 30th, you have to prepare all the prime entry books, and from the prime entry books, then you have to transfer to ledgers. So the opening balances, you have to record the opening balances in the general journal. General journal is the prime entry book for recording the opening balance. You know that we can't transfer the amounts to ledgers directly. So before recording in the ledger, first it should have recorded in a prime entry book. So to record the opening balances, the prime entry book is what? The prime entry book is general journal. So you have to record this asset and liability balances in the general journal. So in your worksheet, open a general journal. Here you write the opening balances. Asset balances should be recorded in the debit column. Liability balances should be recorded in the credit side. Right. Now take the worksheet. Right. Building account 900,000. Building account 900,000. Right. Motor vehicle debit 500,000. Stock balance 50,000. Debtors Kamalan debit 35,000. Debtors Vimalan debit 45,000. Cash and bank balance 140,000. You have to record all these assets in the debit column of the general journal, and liabilities should be recorded in the credit column. Creditor Amal credit balance 30,000. Creditor Kamal credit balance 20,000. Interest payable 5,000. Right. So but capital is not given. You have to find out the capital. How will you find out this capital? Right. You have to get the total of assets. So total of asset is 1,670,000. From this total of assets, opening assets, deduct the opening liabilities, 25,000. These are the liabilities given. So from the 1,670,000 asset balance, assets total, you deduct the 55,000 deduct the 55,000 and find out the capital. So capital is 1,615,000. Right. Opening balances recorded in the general journal. Then from the general journal it should be taken to ledgers. So we will take this later, because normally balances are the balances transferred to ledgers at the end of the month. So for the whole month you have to record the transaction only in the journals. At the end of the month we can transfer the amounts recorded in the journals to the ledger. Right. Now go to the sum. We recorded all these assets in the general journal. Then transactions occurred during 2017 January. A computer was purchased from Anand for office use, 80,000. So it is a purchase of asset on credit. So if any assets purchase on credit, that should be recorded in the general journal. General journal is the prime entry book for recording any assets purchased on credit. Right. So you record that in the general journal. This is the general journal. Under the opening balances transferred to ledgers, that narration for the opening balances recorded. Now second entry, computer account debit 80,000, Anand company credit 80,000. Write a narration also, credit purchase of computer. Right. So this credit purchase now we recorded in the general journal. Later we shall transfer this to ledger. Right. Now go to the question again. Then date is 3. Cash sales 110,000 inclusive of VAT 10%. So in this cash sales 110,000, 10% VAT is included. 10% VAT is 10,000. So you have to write the cash sales in which journal. You have to record it in the cash receipt journal. So in your worksheet, open a cash receipt journal, right, and write sales under the description column. Sales amount is 110,000, and in this 110,000 VAT is how much? 10,000, and the balance 100,000 is sales. So you have to record the amount separating into VAT and sales in the analysis of received columns. Right. Next, read the question. Now, date is 8. Purchase 77,000 inclusive of 10% VAT by giving 50,000 check bearing number 78384. So, purchase for 77,000. They have given 50,000 check, then balance 27,000 would have given as cash. No matter cash or check given, we assume that is purchased by paying cash, because we consider cash and check both are cash payment, right? So you have to record this in the cash payment journal because this is a payment. So go to your worksheet and open a cash payment journal. Under that, write purchase, amount is 77,000, VAT is 7,000, 10% VAT inclusive, no? VAT is 7,000, purchase is 70,000, right? And then date is 10. Purchase from Amal for 220,000 inclusive of 10% VAT. So it should be recorded in the purchase journal. When recording this, we have to separate the purchase amount and VAT amount and record it in the purchase journal. So open a purchase journal, right? There you write Amal, amount is 220,000 and it said 10% VAT inclusive, no? So in this 220,000 inclusive VAT is 20,000, so the balance is purchase. So how will you find out this inclusive VAT 20,000? Yeah, you have to divide the 220,000 by 110 and then multiply by 10. Then you can find out the VAT. Right. Next, date is 12. Purchase return to Amal 11,000 inclusive of VAT 10%. So if you wanted to find out the VAT 10% is how much, you have to divide this 11,000 by 110 and multiply by 10. Then you can find out the VAT 10% is how much. So VAT 10% is 1,000. So record that in the where? In the purchase return journal. Right. In the purchase return journal, open a purchase return journal. Right. Purchase return to whom? Amal. How much is the amount? 11,000. So inclusive VAT is how much? 1,000. So balance is 10,000. Right. Then date is 14. Electricity bill paid 1,150 inclusive of VAT 15%. So VAT inclusive here how much then? 150. Record it. That is electricity payment, no? Electricity payment is cash payment. So record that in the under the cash payment journal, electricity, the amount is 1150. So the inclusive VAT is 150. So the balance is balance should come under the expense. Sorry, it should come under the expenses. So cut this and paste here. It is an expense, no electricity. Yeah, expenses. Right. Then go to the question again. Right. Sales to Kamalan 440,000 inclusive of VAT 10%. Right. So it should be recorded in the sales journal. So here the inclusive VAT is how much then? 40,000. So you know how to calculate that 40,000, no? You have to divide the 440,000 by 110 and multiply by 10. Then you can get the answer 40,000. So now record it in the sales journal. So sales journals is here. Kamalan, amount is 440,000. VAT is 40,000. So balance 400,000 is sale. Right. Then date is 17. Kamalan returned 22,000 sales value of goods, which includes 10% of VAT. Right. So you have to write it. Kamalan return, no? So that is sales return. So you have to write it in the sales return journal. Here, sales return journal. Right. Kamalan returning how much value of goods? 22,000. So included VAT is 2,000. So the sales return amount balance is 20,000. Right. Next. Date is 18. Insurance paid 2,000. Right. It is a cash payment. So record that in the cash payment journal. Insurance, okay, in the amount column 2,000, and record that in the analysis of payment under the expense column. Right. Next date is 19. A check was issued to Amal with the view of solving all amount payable to him, receiving 15% cash discount. Right. Now, up to now, how much should be payable to Amal have to be calculated first. Yes. Now, go to your worksheet here. Amal is a creditor. When beginning the year, there was a balance of 30,000 payable. So you calculation of payment to Amal. This is opening balance. 30,000 opening balance is there. Then you check whether the business has purchased from Amal. Where will you check that? If you go through the purchase journal, you can find it. Here in the purchase journal, here purchase 220,000. So opening balance payable 30,000 and purchase during the month 220,000. So total payable is 250,000. And you can find out that there is a purchase return. If so, you can find this where? If you check the purchase return journal, see purchase return journal. Here, purchase return journal. Amal, 11,000 value of goods have been returned to the Amal, no? So, if we have returned goods value of 11,000, we need not to give 250,000. So, deduct the returned goods value from 250,000 payable. So, the balance payable amount is 239,000. So, this is the amount payable up to this date. Right. Now, when paying this amount, 15% discount is allowing by Amal. So 15% discount is 35,850. So if deduct the 35,850 from the payable amount 239, balance paying amount is 203,150. So record this in the cash payment journal. In the cash payment journal, that this is cash payment journal, right? Paying to Amal, discount, 15% discount, 35,850. So paying amount is 203,150, and record this under the payment to creditors column also. Right. Now go to the next date. The next date is 20. Kamalan has sent. So Kamalan has sent mean Kamalan should be a debtor. Kamalan has sent a check after deducting 10% of cash discount with the view to solving whole amount payable by him. So now you have to find out how much should be receivable up to 20th January from Kamalan. So you can find out this in your worksheet. First you see if there is any balances receivable from the debtor Kamalan at the beginning of the year. Yes, 35,000 is there. So put a heading calculation of receipt from Kamalan. Right. How much opening balance receivable from Kamalan is 35,000. This is opening balance receivable. Right. Now check whether the business has sold any goods during this month. You can check it from the sales journal. Here in the sales journal, Kamalan 440,000. So Kamalan should give another 440,000 with the opening balance. So total receivable from Kamalan 475,000, and deduct the sales return. So Kamalan should have returned. Check, it is in the sales return journal. See, sales return journal, Kamalan has returned here 22,000 value of goods have been returned by Kamalan. So you deduct the sales return from the total receivable amount 475. So balance receivable is 453,000. That is the amount up to this date that the Kamalan has to be given to the business. Now, when paying this, the business allowing him to 10% discount. So 10% discount is 45,300. So balance money he should give 407,700. So it is a cash receipt. No, yeah, it is a cash receipt. So you have to record it in the cash receipt journal. Right, under the description, Kamal, and discount allowed is 45,300. So balance the amount that the Kamalan giving is 407,700, and record that 407,700 under the receipt of debtors column also. Now go to the next date. The next date is 22. Sales to Vimalan 330,000 inclusive of 10% VAT. So in this 330,000 inclusive of VAT 10% is 30,000. So you have to write this in the sales journal because this is a credit sale. So in your worksheet, under the sales journal, right, Vimalan 330,000 total amount, and inclusive VAT is 30,000. So sales is 300,000. Right, now the next date is purchase from Kamal 55,000 inclusive of VAT 10%. So inclusive VAT is 10% is 5,000. So you have to record this in the purchase journal because this is a credit purchase. No, right, purchase journal in your worksheet, purchase journal, under the purchase journal, Kamal 55,000 is the amount, inclusive VAT is 5,000. So purchase amount is 50,000. Right, next date is 24. Sales return from Vimalan 33,000 inclusive of VAT 10,000. 10%. So 10% is 3,000. So you have to write it under the sales return journal. Right, in your worksheet, under the sales return journal, Vimalan amount is 33,000, inclusive VAT is 3,000. So the sales return amount is 30,000. Right, the next date is 25th. Purchase return to Kamal 5,500 inclusive of VAT 10%. So 10% VAT is 500. So record this in the purchase return journal. Purchase return journal. Just here, purchase return journal. Kamal amount is purchase return amount is 5,500. Inclusive VAT is 500. So balance purchase return amount is 5,000. Right, now go to the next date. Next date is 26. Drawing 5,000 cash. Right. Drawing 5,000 cash should be recorded in the cash payment journal. Right. Drawing here 5,000 and record this under the payment column also here. Drawing is a payment, not an expense. Huh? Keep in your mind that is not an expense. Payment. Right. Now next date is 27. Telephone bill paid 2,300 inclusive of 15% VAT. So 15% of VAT is 300. So it is a telephone bill payment is a payment, no? So write it in your worksheet under the cash payment journal. Here, cash payment journal. Telephone charge 2,300 and inclusive VAT is 300 and the balance 2,000 show under the expense. Right. Next date is 28. Bank charged 1,000 for checkbook. So if bank charged 1,000 for checkbook, usually although it is given on 28 under the transaction given, it is given under the date of 28. Actually we don't know until we receiving the bank statement. The bank statements we receive at the end of the month usually. So actually we can't record this checkbook, the amount charged for checkbook 1,000 on the same day 28 in the cash payment journal. We can't write it because we don't know, because bank is sending the bank statement after the month end. So mostly we record this end of the month, that means end of January, but we will receive the statement for January month in February 2 or 3. So if we receive February 2 or 3, we can't record this in the cash payment journal, because after that salary and other expenses would have recorded in the cash payment journal. So the most appropriate way is, the better way is recording this bank charge 1,000 for checkbook in the general journal. That is the good way. So write that in the general journal, but check it. It is not recorded in the general journal, no? So we shall record that in the general journal. Right. Bank, next date is bank charged 1,000 for checkbook. So it should be recorded in the general journal. So in the general journal, now it is written in the general journal for checkbook account debit 1,000, cash credit 1,000. Right. Next date is 29. Salary paid 15,000. So it is a cash payment. So salary amount is 15,000 and in the expense column 15,000. Right. Next date is bank charged a service charge of 5,000. Yeah, if bank charges service charge of 5,000, that also we don't know until we receiving the bank statement. So after preparing all the journals and after balancing journals, we will receive this information. So we have to record this in the general journal, right? In the general journal, 30th, in the general journal, write it bank charge debit 5,000 and cash credit 5,000. Right. Now up to 30th, we record all the given transaction only in the prime entry book. Still we did not transfer to ledgers, right? Usually the normal procedure is we don't transfer to ledgers when and when we receive the when and then we receive the transaction, we don't transfer to ledgers. First we record all the transaction in the prime entry books. At the end of the month only we transfer to ledgers. So now up to 30th we record all the transaction in the prime entry books. Now from the prime entry books we have to transfer from the prime entry book, we have to transfer the amounts to ledgers, right? Now go to the working sheet, right? Go to the working sheet, right? Working sheet. Now we shall transfer this building debit 900. It should be debited to building account. See, open a building account here, debit 900,000. Right. Next, motor vehicle debit 500,000. It should be debited to motor vehicle account. Open a motor vehicle account here, we debit. Right. Next, balance is stock 50,000. Right. Open a stock account, and where you record the here stock account. Where open a stock account. Where is stock? Here stock account. Here debit the amount 50,000, and then debtors. There are two debtors, Kamal and Vimalan. Total 35 plus 45, 80,000. So transfer this balance to debtors control account. Yeah, balance 80,000. And then cash balance 140,000. So transfer this to cash control account. Cash control account 140,000. And then creditor total balance is 50,000. No, 30 and 20, 50,000. Transfer this to creditors control account as opening balance. Here 50,000. And 5,000 interest payable balance is there, so that should be transferred to interest payable account, interest account. Here interest account balance 5,000, right? And then we find out the capital 1,615,000, that should be recorded in the capital account. Check whether capital account is there. Yes, capital account, yeah, here 1,100,000, 1,615,000. Right, now from the general journal we transferred the opening balances, and then in the general journal second, the credit purchase of computer is recorded. No, that also should be transferred to ledgers. Computer account should be debited, Anand company account should be credited. Check. Here computer account debited, Anand company account credited. Then checkbook account should be debited, cash account should be credited. Yeah. Here cash account credited, here 1,000, but you can see that once we get the total and we have received the brought forward balance, and then checkbook 1,000 is credited 1,000 later, because the checkbook taken and bank charge details would have received after closing this balance, closing the cash book, we would have received the bank statement. That's why I have recorded that checkbook entry and bank charge entry later, right? So here cash book is credited and checkbook account would have debited. Here checkbook account debited. And bank charge, here bank charge is debited and cash account is credited. Cash account is credited. Here bank charge. So double entry first here recorded. Here checkbook is debited. Sorry, the bank charge debit, cash account credited is already recorded in the general journal. After recording in the general journal, we should transfer to ledgers. Right, now we have transferred all the entries recorded in the general journal to the ledgers. Now go to the cash receipt journal. Right, discount allowed total 45,300. It should be debited to discount allowed account and credited to debtor account, because when debtors are paying, we allowing discount. When debtors are paying money, we allowing discount. So debtors balance is decreasing. So debtor account should have credited and discount allowed account should have debited. Check. Debtor here, debtor control account credited and discount allowed account would have debited here, because by discount allowed debtors amount is decreasing. Right, next cash receipt amount column. So this is the total amount of cash received. So it should be debited to cash control account and credited to other accounts. Other accounts mean VAT account, sales account, debtors account, because these amount are the break of this total amount. So it should be first debited to cash control account. Yeah, here cash control account is there here. Total receipt 117,700. Yeah, check total receipt. Yeah, 117,700. And now 117,700 is debited to cash account. No? So the same amount should be credited to other ledgers. One debit is finished. No? Now we have to same amount we have to credit it. So when crediting, you credit this breaks. Credit this break of this 117,700. 10,000, 100,000, 400 and 7,700. So you have to credit this. VAT account credit 10,000. VAT account you credit 10,000. Here VAT account. Here VAT account credit 10,000. And write the narration cash. Why? Because the other entry debited to cash account. No? So you have to write the name of the debited cash account here, right, as narration. Then cash account credited, and the other breaks are, this is okay, 10,000. Sales should be credited 100,000. So sales account, yeah, open a sales account. Yeah, sales account credit 100,000. Narration cash. Then the other break is 407,700. This is cash receipt from debtors. So you have to credit to debtors account. Cash receipt amount should be credited to debtors account. Where debtors account here? Yeah, credit here. And narration cash. Right. Now we record all the credit entries as we debited this 517,700. Here there is no income and receipt. Now cash payment journal. So in the cash payment journal, discount received column total. Discount received column total. That discount is we are receiving when we are paying money to creditor. So by discount receiving, actually creditors decrease. So you have to debit to creditor account because creditor decrease. No. So normally creditors liability, credit balance. So creditors should decrease. No. So you have to debit in the creditors control account. Now by this amount creditor is decreasing, and this discount received is an income. So you have to credit to discount received account. So credit the discount received account, debit the creditors control account. So double entry is finished. Now go to the cash payment journal, and total amount paid is how much? 305,600. So it is cash payment. So you have to credit to cash payment, that means cash control account, 305,600. 5,600 you credit. If you credit 300 and 5,600, the same amount should be debited. What you credited, the same amount you have to debit it to other accounts. So debit to other accounts by seeing the breaks. Here the breaks 7,450, 70,000, 203, 150, 20,000 and 5,000. These breaks are breaks of this 300 and 5,600. So now this 3,500 and 600 is already credited to cash control account. No? Now you have to debit this breaks. Debit this break to VAT account 7,450. So debit to VAT account here. VAT account C 7,450. Write the narration cash. And then 70,000 purchase account, debit purchase account, where purchase account here, purchase account 71,000, sorry, here 70,000, no? Yeah, so it should be 70,000, huh? 70,000 purchase account 70,000, 70,000, right? So this also 320,000, huh? Next, payment to creditor 203,150, right? So it should be debited to creditors control account. So creditors control account here debited 203,150, and then 20,000. This is expenses. All these expenses should be debited to ledgers. So now there are 1, 2, 3, 4 types of expenses. So you should not debit the total amount 20,000 as expense. If you debit the total amount 20,000 as expense, we can't give the enough information to our stakeholders. We don't, if our stakeholders ask what is this expense 20,000, we don't know, because only we have, if we have write the total amount. So we have to record the expenses in every expense account debit side, right? 1,000 is electricity, so you have to debit to electricity account 1,000, electricity account 1,000, here electricity account 1,000, and then 2,000 expenses insurance, so debit to insurance account. Open a insurance account and debit here 2,000. Then 2,000 telephone charge, so debit to telephone charge account. Telephone charge, where debit to telephone charge 2,000. And then 15,000 salary you debit this 15,000 to salary account. Here, salary account. So don't debit whole 20,000 as expense. Whole 20,000 should not be debited. You have to debit 1,000, 2,000, 2,000 and 15,000 separately in particular expense account. Right, next, payment total 5,000. This payment total is what? Drawing. So you debit this to drawing account. Open a drawing account and where debit here. Right, now the double entry is finished. The total of cash payment journal is credited to cash control account, and for that credit of 305,600, these amounts are debited. These amounts are debited to ledgers. Right, now we have to take the total of purchase journal. Right, these are the purchase journal totals. Right, here the purchase is, total purchase is 250,000, so it should be debited to purchase account. And VAT, when purchasing we have paid VAT, so that also receivable. No, we paid the VAT paid amount, we have right to collect, so this is receivable, so debit to VAT account. And if the 250 and 25 debited, this 275 should be credited to creditors control account. Okay, so if you check creditors control account, here it is credited. VAT account and purchase account would have debited. See, VAT account and purchase account would have debited 25 VAT account, and purchase account, here purchase 250 debited. So 250 plus 25, 275, and 275 is already credited in the creditors control account. Right, then sales journal. Get the total of sales journal. Yes, this is the sale, 70,000. You have to credit to sales account, and 70,000 you have to credit to VAT account, because when selling we would have collect the VAT, so that is payable. So you have to, payable is liability, so you have to credit to VAT account. So 700,000 and 70,000 should be credited. Then this 770,000 should be debited to debtors account. So debtors account, check, debited 770, and VAT account and sale account credited. Check that, VAT account and sale account credited. Here sale account credited 700,000, VAT account credited 70,000. Right, next, sales journal totals taken. Now purchase return journal totals. Purchase return, by purchase return, what happened? Creditor is decreasing, so creditor account should be debited by 16,500. Therefore purchase return and VAT account should be credited. Right, check creditor account should be debited. 16,000, the creditor account should be debited here. And VAT account and purchase return account should be credited. Right. See, VAT account here and purchase return account credited. Purchase return account here credited. VAT account and purchase return account credited. So this is the purchase return total. Yes. Now sales return journal total. This total, right, by sales return debtors decreasing. So debtor account credit, VAT account and sale return account should be debited. Right. So debtor account should be credited 55,000. No? Debtor account should be credited. Yes, debtor account should be credited here 55,000, and VAT account should be debited 5,000. Here VAT account debited 5,000, balance 50,000. Sales return should be debited. Sales return should be debited here. Now sales return journal total also taken to ledgers. Right. Now we have taken all the balances from the prime entry book to ledgers. Finally, we have to get the totals of ledger, and then we have to take the carried down and brought forward balance. Here totals, carried down and brought forward of stock. Interest payable, total, carried down and brought forward. Motor vehicle 500,000 total. This is total, carried down here and brought forward here. Computer 80,000 total, carried down and brought forward. Anand account, payable to Anand, no, 80,000 total and total, carried down and brought forward. Same as debtor, 80 plus 770 is total 850. So carried down is 342. Same as creditor, total is 50 and 275, 325. So total 325. From this 325, deduct these amounts, deduct and find out the carried down balance. So this is brought forward. Same as cash control account, opening balance, then receipts total. So get the total. From the total, deduct the payment 305,600. So carried down is 346,100. This is 346,100. Right. Then after that, checkbook and bank charges details we received end of the month, no, after receiving bank statement, no. So these are adjusted here. 1000 checkbook For checkbook 1000 deducted, for bank charge 5000 deducted, so carried down 340,600. The total is 140 opening balance, receipt total 517,700 total, and total, so carried down and brought forward. Then the adjusted amounts 1000 and 5000 for checkbook and bank charge, so balance is carried down this much, carried down, brought forward. Right. Electricity debited, total, carried down and brought forward. Same as VAT account, this is this side, credit side total is more, get the total first here and take the same total here. From this total deduct these amounts and find out the carried down balance, carried down and brought forward. Same as sales account, cash sales, credit sales, total and total, carried down and brought forward. Same as insurance, total, carried down, brought forward. Same as telephone 2000, total, carried down, brought forward. Purchase, this is cash purchase, this is credit purchase, this is total, get the total here, carried down and brought forward. Drawing account 5000, total is 5000, total, carried down, brought forward. Same as checkbook account, salary account, bank charge account, all should be get total and balance should be taken as brought forward. Now these brought forward balances should be taken to trial balance. You have to see the brought forward balance is in which side. See, capital account brought forward balance is in the credit side, no? So you take to credit side to trial balance. Capital balance, credit side. Sales account balance, sales return account balance, debit side. Yeah. And 15,000 purchase return account balance. Yeah. 15,000. Checkbook balance, debit balance. Salary account balance, debit balance. Bank charge account balance 5000, debit balance. Drawing account balance is debit balance. Purchase account balance is debit side balance. See here, purchase debit side. So here also in the trial balance also debit side. Telephone debit side balance. Insurance debit side balance. VAT account balance is credit side. Here check it. VAT account here. VAT account balance, brought forward balance is in the credit side. So you also have to take to credit side. Electricity debit side, sales debit side, discount received credit side, sales credit side, discount allowed is debit side, cash balance debit side, check here, cash account balance, cash control account balance brought forward is debit side, 346,100 in the debit side. So you also take to here 346,100 debit side. Debtors balance debit side, creditors balance credit side, Anand Company computer debit side, motor vehicle debit side, building balance debit side, stock debit side, interest payable credit side. So the trial balance will balance to 2,664,400. 2,664,400. So as we record all transaction in one account debit side and in another account credit side, the trial balance should balance. Okay, right. Now I am going to wind up this lesson. It is balancing in the amount of 2,664,400.